I'm going to do a freeform session on Bitcoin today. I'm going to start by just showing you this here, which is a Bitcoin payment I made for a pizza once in the Pembury Tavern in London. And I paid 0.085 Bitcoin for this pizza, which nowadays is about 9,000 US dollars. I actually love the fact that I have this $9,000 pizza that I once paid for. It's interesting. I actually, in the early days of Bitcoin, I would experiment a lot with it as an actual payment system. I was trying to treat it like a monetary system. I was trying to say, can this work as money? Does it have potential to be a monetary system? So I would do all sorts of stuff around Bitcoin. I'd try to pay interns with it. I would accept it in payment. I used to hang out with the community. I know lots of the people involved in the sort of early Bitcoin community. But nowadays, I'm considered a big Bitcoin critic, all right? And people who don't know my earlier work assume that I've always just been this anti-Bitcoin person. And actually, it's often quite surprising to people because many people have, in some sense, swallowed the story around Bitcoin in which they imagine that it's this big challenge to the US dollar system and to the financial sector and so on. And then, they assume that people like me who specialize in critiquing the financial sector and stuff should obviously be pro-Bitcoin. And the reality is I'm not pro-Bitcoin. Actually, let me just quickly change that. I'm not actually anti-Bitcoin. What I am anti is the bullshit that surrounds Bitcoin. There's this English phrase, calling a spade a spade. And when you say, I call a spade, you just say how something is without any bullshit, right? And that's what I try to do with Bitcoin. I call a spade a spade. But the act of calling a spade is not the same as insulting a spade. You're actually just recognizing what it is. But that's threatening to anybody who characterizes a spade as a golden sword, for example. So the Bitcoin community thinks that I'm anti-Bitcoin because I don't share their description of the thing that they're talking about. I say, hey, it's just this digital object that has a particular usage, and that's what I would call a spade. But they're like, this object is way more profound than that. So they're actually really triggered by the way I describe Bitcoin. But to me, that's not me being anti-Bitcoin. It's being anti the kind of ideology and bullshit that surrounds the object. Okay. And, one of the things to add on to that is, when you're talking about Bitcoin, you got to sort of separate out two big things. On the one hand, there's a critique of the existing monetary system and banking sector. Okay. And on the other hand, there is Bitcoin. Now, often in the Bitcoin community, what will happen is that they have a particular critique of the financial sector. Now, there's many, many groups throughout time that have critiques of the financial sector. And yes, you must critique the financial sector. But then they'll often try to associate that critique with the assumption that you should therefore be pro-Bitcoin, to sort of fuse those two things together, to say, if you are a person who's critical of the existing monetary system, you then have to be pro-Bitcoin. You don't have to accept the connection between those two things. You can have a critique of the banking sector while simultaneously looking at Bitcoin and saying, I don't think it's going to solve that problem, or actually, I think it relies upon that system, for example. Okay, so with that, let's take a bit of a step back to kind of talk about the early days of the Bitcoin world. If you reverse back to the 1990s, and you have the cypherpunk movements they're looking ahead into the future, and they're saying, hey, in the future, if we have mass automation, mass digitization, there's incredible potential for centralization of power in huge state and corporate bureaucracies that will control the internet. And in that context, we want to have some new form of quote-unquote digital cash that could work, to be some kind of counterpower to that system, some way to get around that system. So this is back in the 90s. You have all these sort of cypherpunk characters who are working on different elements that will later become the Bitcoin system. Because in many ways, if you look at the Bitcoin system, it's actually a whole bunch of pre-existing innovations that are kind of put together into a unique and elegant recipe. Now, for example, I do lots of work on the problems of cashless society and the massive centralization of power in corporations and banks and payments companies that will happen in the context of a cashless society. But actually, people in the 1990s, these sort of cypherpunks, actually had a very similar critique. They were saying, hey, there's a really big problem if we end up in some kind of cashless society. Hence, this is why we need digital cash. So in many ways, I actually resonate with the intuitions of the early cypherpunk community and what they were trying to do. If you actually read the original Bitcoin white paper, which is this very sort of short, elegant document, it's very beautiful in a way, actually. It's incredibly simple. Somebody's basically taken a whole series of these earlier innovations and arranged them or sequenced them in a new way that gives rise to this very profound infrastructure. So from an infrastructural perspective, I think Bitcoin's very beautiful. Or at least I can understand why geeks and mathematicians and various other people were initially kind of entranced by its structure. I'm not going to go into the technicalities of that structure, but basically they figured out a way to move units around a gigantic network of strangers without requiring central intermediaries. And so that's actually a very, very difficult thing to do. Traditionally, in very, very large-scale systems, if you want total strangers to interact with each other, you normally get those strangers to go through some central system to interact with each other, all right? You don't really have ways of getting them to interact directly if you're trying to keep some collective account of who has what. You normally rely on these big hovering institutions in the middle to sort of intermediate between strangers. So what is very beautiful about the blockchain structure underlying Bitcoin is it does actually flatten that out. It sort of finds a way that two random strangers in the world can move tokens between themselves and have that process recorded not by some big central intermediary, but by some kind of network structure that acts to distribute that record keeping, as it were. So essentially you have this kind of distributed structure for record keeping between individuals. Now that's actually very, very profound. Having said that, the question then emerges is like, what are you using that record keeping structure for? What's the thing you're keeping a record of? This is probably the biggest first problem you'll find in the Bitcoin community is that there was an early assumption at the very, very beginning of the community that the units being moved around were simply cash or that they were money. This was a very, very big assumption. And the reality is that the only thing you could say about the early units being moved around in the Bitcoin system was that they were tokens. And a token is not the same as money. Okay, a token can be any type of unit that has some sort of movability. You could have, for example, like a blank token. Imagine a piece of flat plastic that you just sort of move around between people. That's a token, but it doesn't necessarily mean anything. You could also, though, have something like a token that enables you to use games in a games arcade. That would be a type of voucher that you can move around. You could have a token that has a picture of the Buddha on it. That would just be something that represents an idea. So there's different types of tokens. So the mere fact that you can move tokens around doesn't actually tell you much about anything. You have to actually define what specifically this token is. Now, in the case of an actual monetary system, the tokens have a very specific structure, or a very specific way of being utilized in society and a particular history of how they get entrenched into that position. So in the early days of Bitcoin, when it first came out, you would just have people verbally asserting. They would just say, okay, here we have this system for moving these tokens around, but these tokens are money. Now, one of the reasons why people in the early Bitcoin community could easily make this mistake was that in general, there is very poor understanding of monetary systems in the public. In general, we are taught that money is some kind of like numbered object with sort of positive numbers that it manifests in our world, either on a screen with some little symbol next to it or in some kind of cash form. But we have a sort of mental association of money being this kind of asset, a movable asset that can be kind of transmitted around. And superficially, when you look at the Bitcoin system and you look at the sort of numbers represented there, they do superficially look like that. The branding around Bitcoin has this metallic imagery, which sort of tries to evoke some kind of idea of like gold or something like that. And then it has the actual cultural conventions of money in the sense that it'll be this number and then it has this little like suffix placed after it, BTC. So it sort of like superficially looks like money-like in a sense. And actually, it's very, very easy to confuse somebody in the public by saying that is money. In reality, what Bitcoin is, if you dig down into the deep structure of it and ignore the community around it and what they're saying, and you just look at like de facto what it is, Bitcoin is just numbers written out after the clerks that run the system expend energy. I'm not going to go into the structure of how the whole consensus algorithm works, but basically one of the ingenious elements of the Bitcoin system was that they try to create this sort of incentive mechanism within the structure of the system. In the traditional monetary system, there's a process of issuance of tokens outwards by money issuers. Then there's a separate system of transfer of tokens. There's money issuers pushing tokens out, and then there's a payment system that moves the tokens around, and then money can come back to the issuer. Issuance out, transfer across, redemption back, boom. Those are the three types of things you would find in a normal monetary system. In the Bitcoin system, one of the complexities is that there isn't really an issuance process for a start. There isn't a kind of money issuer who says, boom, use my money. Rather, there's a kind of robotic protocol that produces tokens that are then kind of grabbed by these clerks who are maintaining the system. All right. Now, the kind of ingenious thing in Bitcoin is that this is used to motivate these clerks to run the payment system. If you go to the banking sector, you will have, for example, the loan department, and the loan department in the banking sector specializes in issuing out money. They're actually money issuers. So they're going out looking for types of opportunities in society, and they push tokens into those situations. Then there's the payments department in a bank. The payments department is separate to the loan department. The payments department specializes in moving these pre-existing tokens around, okay? And they get paid a salary to do that. Now, in the Bitcoin system, what they're trying to do is to find a way to get a whole bunch of strangers across the world to act as a kind of payments department, but without giving them a salary. And the way to do it was to say, if you can successfully operate the payment system, you get to reward yourself by grabbing tokens out of this kind of store of tokens, and then you can sell those tokens to people, or you can do what you want with them, right? And that's what they call mining in Bitcoin. And it's a process whereby these sort of techno clerks, as it were, grant themselves tokens after successfully recording the movement of other tokens. But those tokens being quote unquote mined are literally just numbers written out by these clerks. If you look at the so-called Genesis block of Bitcoin, the very first creation of these tokens, there's literally just a guy who writes out the number 50. It's like the sort of immaculate conception of the Bitcoin system. And of course, when I say writes out, it's not literally writing out, it's written out on a binary code. But you could imagine, for example, if you were doing it in physical form, this guy like writes out 50 on a piece of paper, and then you can like tear it in half and give 25 to somebody else, right? I know that's a little bit complex, but that's the sort of the basic structure of the system, right? Is these numbers being written out and moved around. You know, many times when I say this stuff, when I say stuff like Bitcoin is just numbers, I'll get people come to me and be like, oh yeah, well, real money is just numbers too. And I'll be like, bullshit. The real monetary system is anchored by immensely powerful state and financial institutions, and they experience that money that they issue out as a liability. They're like redeemable IOU and voucher structures. Those numbers that get written out in the normal monetary system or the normal banking sector have a liability side. Best way to understand assets and liabilities when it comes to money is to think about vouchers. So if you think about like a voucher for, let's say, Walmart or Starbucks or whatever, if you receive that voucher, you will have basically this object that has positive numbers on it. It says, $50 worth of coffee or something like that. You have that. But the only reason that object has power to you is the fact that there was an issuer, let's say Starbucks in this case, who pushed that out to you saying you get to come and demand that back from me. There's a redemption structure that gives the positive numbers power. Now, from the side of Starbucks, that plus $50 that you see on their voucher is experienced as a minus 50 to them, because they've essentially issued a promise, and to them that represents a liability. And a liability is basically when somebody has a claim upon you. A voucher has a very clear asset and liability side, and the whole monetary system that we use has a very clear asset and liability side. Of course, going back to that point I made earlier, most people in the public aren't very clear about the liability side because we experience the asset side of money. We only experience these positively numbered units. But in the banking sector and in the state, there's a gigantic liability side that anchors out those positive units that we're using. Now, in the Bitcoin system, essentially they have no liability side. You only have these positively numbered objects that move around. Now, to make that work, to make those objects work in the eyes of the public without having a liability side or without having a redemption side, you essentially have to try to create a mythology of this as being some kind of commodity-like thing. Commodities don't have a liability side. For example, I'm just going to take this cup of tea that I have here. there's no liability side to this T. It's purely an asset. It's something that I have and can use. Yeah, it has no rights attached to it. It's not a voucher. It's just something that's like a commodity in itself. Now, that's what the sort of imagery that they try to create in the Bitcoin community is, this idea of this sort of asset-only digital object that's kind of like a commodity. So over the years, the way they try to sort of mobilize support for that is to invoke a lot of conservative ideas about how money should be and how it's supposed to work. But this is where a lot of the sort of damaging aspects of Bitcoin start to emerge. So while the decentralized structure for moving the tokens around is very, very profound, the actual ideology and the things being moved around, or the ideology of the things being moved around, is very, very conservative. Also very, very misleading, and plays into lots of damaging tropes about the monetary system that don't help anybody. And what's even more damaging is the fact that they don't even challenge the existing monetary system, but rather rely upon the existing monetary system in order to work. So if I was to summarize the three most destructive elements of the Bitcoin system, it's the fact that it reinforces pre-existing public delusions about money. Secondly, it actually acts as a kind of distraction to people. They're sort of chasing after this thing that's probably not going to do what it's going to do. And thirdly, and perhaps even most damagingly, it actually reinforces the status quo of the existing monetary system. That's kind of a hard thing for people to unpack, because there's just an assumption that there's this whole kind of like rebellious structure of Bitcoin that somehow really is going to take down the existing financial system. But imagine, for example, just imagine you're like an imperial ruler. Let's go to the Star Wars universe. Let's say like Darth Vader and has like taken over, right? And they are the imperial rulers of the universe. And then they see that there's a kind of rebel movement that is saying, hey, Darth Vader is an imperial overlord and we got to take Darth Vader down. That sort of seemingly appears to be a threat to Darth Vader, right? But imagine if that group then had a totally kooky and ineffective mechanism for trying to do that. In the world of Darth Vader, actually such a group is quite useful because it will attract attention. It'll attract rebellious energy, and that rebellious energy will be pushed into something that's kind of useless. So it actually dilutes the power of rebel movements. Okay, so actually for imperialistic systems, it's useful to have faux revolutions. And for the existing fiat money system, Bitcoin actually serves quite a useful function because it sort of deflects a lot of attention away from more meaningful solutions and often actually acts as a kind of, I want to say carnival. To understand this, you kind of need to look at the anthropology of carnivals. Historically, the function of carnivals, let's for example say in medieval society, was to temporarily invert power structures to release tension in society. So for like one day a year, you get to mock the elites and dress up like a king, for example, if you're a peasant. So you get to sort of poke fun at the power structures. But then that day goes past and then the status quo returns. So the carnivals, this temporary moment where all this rebellious energy gets expended and then it sort of closes down and you go back to the status quo. If you want to understand this kind of vibe, think about like New Year's Eve. I used to live in London, and there's the underground train system in London called, the Tube. And normally when you're on the Tube, the basic protocol, the cultural protocol is that you don't look at anybody else. You don't try to make conversation. You're supposed to sit and look at your phone or read your newspaper or your book. On New Year's Eve, though, that rule suddenly changes. Suddenly everyone can just like randomly talk to each other. You can sort of tell people that you love them and wish them good things and so on, right? It's like a temporary moment, a carnivalesque moment where suddenly the rules are inverted and then it switches back. Okay, so January comes and everyone's back to being on the Tube, staring ahead at their newspaper again. So that's the sort of the concept of a carnival, and in many ways, Bitcoin has a lot of carnivalesque elements. There's lots of this acting out of a type of different rules set temporarily, whilst at the same time being aware that it's not really fundamentally changing anything. There's a lot of this kind of fantasy of rebellion, and actually it's very, very intoxicating for people. Not only is it intoxicating, but it's also quite lucrative. It's like a lucrative carnival where you can kind of play act at sort of fighting the financial sector whilst trying to get rich in US dollars. Okay, so that's a very, very compelling kind of like vibe. But going back to the point earlier about a critique of the financial sector versus like Bitcoin itself, Bitcoin actually has a particular function within our existing system. It doesn't fundamentally challenge the system. Often it actually relies upon the system. And the best way to understand both that point And also, actually, what Bitcoin is good for is to look at how the interaction works. And one of the big concepts I use, which is probably one of the core concepts to understand if you want to try to understand Bitcoin, is the concept of counter trade. Counter trade is basically the process of using the monetary resale price of one object to buy another object. Let me use a simple example here of this pair of binoculars that I have. Let's say that this pair of binoculars costs, for argument's sake, $100. If I was to resell this, I could get $100 back. And let's say that there's something out there that costs $50. I could say to the seller of that thing, I say like, hey, can I have 2 of those things in exchange for this pair of binoculars, which costs $100? You can resell this for $100 and thereby get the price of those 2 things. Now, if there was an alien watching this from above and they saw me handing over some binoculars for 2, I don't know, let's say ceramic vases, they might say, oh, Brett, bartered binoculars for vases. Alternatively, they might believe that this is a monetary system. They say, oh, look, these people use these strange objects as money. In reality, what actually happened there was I was using the monetary resale price of that object to buy those things. The alternative would be to actually go and sell this on the market, get the $100 and pay the person for the vases, right? What we've just done is we've just superimposed 2 monetary transactions over each other and canceled out the money legs of those transactions, just leaving 2 objects to move. It's worth hardwiring into your head how counter trade works because it's going to show you how the Bitcoin system works. Okay, so imagine you buy a jacket for $100 in the store and you leave the store with your jacket and you look at it and you're like, actually, this is not quite right. I'm going to return this jacket. So you go back to the store and you say, can I return it? And the person says, well, you can, but you can also just swap it for another one that you like of equivalent price. And so you swap the jacket for another jacket and walk out with another jacket. Again, if your alien's watching from outer space, your alien anthropologist, for example, and they're like, what are these humans doing? It would look like I went in and paid for a jacket with another jacket. It would look like a kind of barter interaction. But implicitly what was happening there was that I resold the jacket for $100 and then gave the $100 back to the shop to buy a different jacket. It's actually 2 monetary transactions superimposed to make it look like a single thing. Now, this is exactly what happens with all cases when people are claiming to buy things for Bitcoin. So, for example, I started by showing you this time I quote-unquote bought pizza for Bitcoin. But if you look closely at this, you'll see that it actually has a pound price, 24 pounds and 40 pence. That was the real price of this object. And what happened when I went and said, hey, can I use Bitcoin to pay you, is that the pizza place went and looked at the market for Bitcoin and they calculated how much Bitcoin they'd have to sell in order to reach 24 bucks and 40 pence. They calculated a counter trade ratio. The way you can tell this is that if I went to the pizza place the next day and looked at their menu, the price would still be the same. It would still be 24 bucks and 40 pence. This was 2 pizzas, actually, I think. It would still be the same for a price for those 2 pizzas. If I went back the next week, it would still be the same. If I went back in 6 months, it might have shifted slightly through processes of gradual inflation or perhaps supply chain shock in the wheat market or something. But these price changes are going to be fairly slow, or else fairly irregular due to particular events in the world. All right, but in general, we expect when you go to the next day to buy the same thing, you expect the price to be the same. But the so-called Bitcoin price for this pizza would change constantly, because what's actually happening is it's a counter trade ratio. It's not a true price. The fixed amount is the 24.40. That's the actual price. And then they're looking at the market and they're saying, how much will we have to sell to get this fixed amount? And this is easily verifiable. If you go to Bitcoin Beach, for example, which is this place in El Salvador where they claim to be like the sort of Bitcoin paradise. All the prices in these places are quoted in US dollars. they don't have a menu on the wall, some kind of fish and chips place there that has fixed Bitcoin prices. No, they have dollar prices, and then when you offer to pay Bitcoin, they calculate the counter trade ratio by looking at it in the market. So the so-called Bitcoin price for the pizza in Bitcoin Beach is constantly fluctuating or trembling all the time as the US dollar price of Bitcoin changes. That's how you tell that it's counter trade. All right, now the big thing with counter trading Bitcoin is that Bitcoin is highly counter tradable, one, and also when you're doing it, it superficially feels money-like. So for example, if I'm counter trading an object like this, it doesn't feel money-like. It feels more like what you'd call barter. You'll experience yourself moving this heavy, definable object, But in many ways, this object, its counter-tradability is emerging from the fact that it has some other use. I use it for example, like watching birds or something like that, right? It has a defined use, and that's what gives it an original price within a monetary system. And then you can use that price to engage in counter trade, which is, buying something else by using the resale price of an object. In the case of Bitcoin, though, what's so fascinating and complex is that the object itself has no external use beyond counter tradability, right? If you look at what a Bitcoin is, it's just these limited edition numbers written out that have a sort of metallic imagery placed over them. And the description of what they are is supposedly a monetary system. The description of this thing is this is a optical device that enables you to look far. Whereas, let's take something like this plastic token. What is the description of this thing? It's like a movable object that might stand in for something like that. And in many ways, when you look at a Bitcoin token, it's just like this digital version of that thing I just showed you there. It's just this movable object. And so in some ways, this is kind of why it's highly counter tradable. It's very, very movable. At the same time, this is a massive weakness, because if you look at it and you say well, where is it getting its price from exactly? What exactly is it that's giving it this price? It's very, very hard to pinpoint this, because what the Bitcoin community will try to say is that they'll say, well, it's its exchangeability that's giving it the price, right? They'll say, oh, the reason why people value it is because it is exchangeable. But the reason that it's exchangeable is that it has a price. They have a lot of circular reasoning going on there. Now, I know this because in the early days of Bitcoin, you couldn't really counter trade them. So for example, when Satoshi Nakamoto writes out the first Bitcoins into the system, basically writes out 50, those weren't exchangeable for anything. Those were simply digital objects that could be moved. Once you could get a price for Bitcoin through some kind of mystification process, it then induced that property of counter tradability, and that property of counter tradability could then in a circular fashion be used to justify why it had a price. But you can see why this is weak. If Bitcoin has no price, it has no exchangeability, it has no counter tradability. And this is one of the ongoing problems that the Bitcoin community faces, is that it cannot really describe by any external mechanism why the objects should have a price other than the fact that they're movable. And often when I've been approached by the Bitcoin community to give my takes on it, I'll say things like, if you want to make this object into a monetary system, there's really only two paths available to you. You either have to build a liability side for it, which would involve, for example, let's say that the US state decides we're going to start taking Bitcoin in as taxes, but not only that, we're going to start pricing that in Bitcoin. That would give it a hard liability side. It would actually change the nature of the token. It would take a token that has no liability side and anchor it, changing the nature of this thing. That's one path. In the absence of that, you have to somehow find a way to culturally mystify this thing. In the case of Bitcoin, the three primary mechanisms for doing that is, one, you build an edgy story around it, all right, which is what the community has done. Two, you focus on the mysticism. You kind of create this quasi-religious mystique, and part of the process of doing that is to focus on the mysterious founder, this kind of immaculate conception of the system by this kind of shady character who nobody knows. It kind of gives it this mysticism and this mystique. So you've got this kind of politicized mysticism. And then the final element is that you try to use the mathematical beauty of the system, right? There is a certain elegance to it, as I said. There's a certain type of abstract, almost like geometric kind of beauty to it. So you try to create this sort of mystique around this object based on these types of factors like that. Because it's not like something like gold, right? Gold has thousands of years of cultural history. You can touch it. It looks beautiful. It has particular associations with elite status and religious ritual. That's taken a very, very long time to build. For Bitcoin to get into the same position would take a lot of work. But bear in mind, gold isn't a currency. Gold is a counter trade object. So even if Bitcoin can get to the point of having the same cultural mystique and cultural entrenchment as gold, doesn't make it a monetary system. It makes it a counter trade system that's still dependent upon US dollar pricing. If you wanted to somehow truly detach from the US dollar system, wow, that would take a lot of work. You'd have to have, for example, the US state itself starting to take it on as its own currency. But the US state does not have any interest in doing that. The US state has massive cultural and hegemonic power due to the US dollar. They don't want to destroy that. And actually, secondly, the Bitcoin industry doesn't want Bitcoin to be a currency. The reason why is that the Bitcoin industry makes all its money in US dollars and relies upon people buying and selling Bitcoin so it can scrape fees, right? So even the whole crypto industry, Coinbase, all these massive players that lobby the Trump government, none of them want Bitcoin to be a currency. They want it to be an asset priced in US dollars so that they can shed tons of money for themselves. All right, so I've just been doing freeform riffing here, so I'm aware that there's a lot of different topics and lots of different ways I've kind of gone about talking about them. Let me just back out here and just say, having described all these processes of countertrade is useful. Having a highly countertradable digital object can be very, very useful in the world. All right, it enables you, for example, to bypass the banking sector. It can be used in certain niche situations to transact anonymously and so on, right? There are uses to a countertrade object. It's just not what the Bitcoin community says it is. The Bitcoin system is not a competitor to the US dollar. It's a system that relies upon the US dollar. So it's actually hosted by the US dollar in many ways. Now, saying this isn't a critique of Bitcoin. In many ways, it's a successful system. It's actually a very, very highly successful digital object that's managed to entrench itself into the cultural imagination. But that does not mean it'll ever do the things that the Bitcoin community claims that it will do. It doesn't mean that somehow it's always going to go up in price. It doesn't mean it will somehow become the monetary system. In fact, the most they can hope for is that it becomes culturally entrenched and somehow stabilizes a little bit. But as I said, it has a fundamental instability in that the thing you're talking about, the thing being moved around in a decentralized network, is fundamentally a kind of featureless digital object that can't really be easily anchored to anything. Now, one point I'm going to make is that lots of the things I've been saying will make more sense to you if you share the monetary theory that I subscribe to. Now, the types of monetary thinking that I come from comes out of economic anthropology and stuff like chartalism, for example, theories that describe money in terms of credit rather than money as being some kind of commodity. The typical way that most people in the public conceptualize money, at least at some metaphoric level, if not at a literal level, is they imagine it to be a commodity. Now, if you're holding a commodity orientation to money or a commodity way of thinking about money, you're always at some level going to be hampered from understanding how monetary systems work, because monetary systems really do not work through commodity dynamics. They work through credit dynamics. Now, to understand that requires that you go and actually research the credit structure of monetary systems, which is a hard topic for many people. It's also not really used in the modern economics discipline. The modern economics discipline has a completely commodity-based way of thinking about money, which means all our economists are using these commodity styles of thinking about money. This takes me back to that point, which between the distinction between the actual system and then the claims made by the Bitcoin community. You actually have to understand our existing system before you start making all these claims about Bitcoin. And unfortunately, a lot of the people in the Bitcoin community really don't have a very strong grasp of how the actual monetary system works, and hence often don't realize that they are being highly quixotic in the way that they're thinking. They sometimes are authentically convinced that they're going to take down the fiat money system, but that sense of being convinced is based on misconceptions about how the fiat system works. What's really happened in the case of Bitcoin is our actual system has eaten it, all right? It's gone and incorporated those tokens, those sort of commodity-like objects pushed out by the Bitcoin community. It's just gone and eaten them and ripped them out and turned them into tradable objects within the existing system, right? That's what gives Bitcoin its counter-tradability. Now, interestingly, you can say in a sense, this is a type of success on the part of the Bitcoin community, right? Because there's a certain type of Trojan horse element there. It's been metabolized by the existing system, and that's kind of what's given it part of its power, and it's what's, gives it that exchangeability. But also, this is what creates a huge kind of distraction in our society. The sort of fantasy of challenging the fiat system, when in reality, the Bitcoin system is totally dependent upon the fiat system. And everyone at some level knows it. There's this whole kind of charade of this sort of rebellion going on. And, that's actually politically useful to many people. There's a reason why, for example, Trump has championed the Bitcoin industry. People like Trump actually realize the political potential in that, right? They kind of like the sort of fantasy spectacle element to it, or as they would say in wrestling, the kayfabe element, the sort of imagination of some kind of big battle going on when everyone kind of knows that it's all staged. And you got to think about it in terms of, the old kind of Roman bread and circuses. popular things you push out to people. And this becomes especially important in the current political moment as a conservative government in the US, for example, seeks to gut the social security system, pulling out those social safety nets while saying, hey, don't worry, you get to speculate on these crypto objects, these crypto tokens, so you can kind of like get rich and escape poverty through this scheme, right? And that's why, the crypto industry realizes that. That's why they've aligned with Trump, and they, in a sense, are doing this collaboration between the Trump project and the crypto industry project. Having said that, you've got to be open to the idea that the underlying technology, the underlying blockchain technology is very useful. There is something profound about being able to coordinate large networks of strangers without central intermediaries. Like that is definitely something that's quite profound, and you can actually work with that. So, I'm not claiming here that there's nothing useful comes out of this technology, and there's lots of potential creativity that can be applied to those blockchain systems. So, when I'm making these critiques of the ideology and stuff around Bitcoin, I'm not coming from some kind of vindictive place trying to sort of pour scorn on everyone who's sort of gone along with it. I'm just pointing out that, many of those stories are based on mythologies, and furthermore, they're exploited by elites. The Bitcoin industry, people like Michael Saylor and all these Bitcoin billionaires make enormous amounts of money by exploiting people's hopes and dreams. They present themselves as being these big champions of the people. People like Saylor, they try to imagine that they're these sort of profound revolutionaries. They're not. He's a guy with a bunch of money who bought a bunch of Bitcoin and is now going to get incredibly rich as the Trump government pushes the Bitcoin price up. I mean, that's basically it. And actually, more than this, they're exploiting Bitcoin itself. As I mentioned in the beginning, I'm not really anti-Bitcoin. I'm anti the bullshit around Bitcoin. On its own terms, Bitcoin is actually a remarkably simple and quite effective system for moving objects around that could be used for counter trade. There's something inherently wrong with that. It's just not a revolutionary system that's going to bring down the US dollar or anything like that. So when these kind of like charlatan guys come along and they make those claims, they're really actually exploiting the Bitcoin system itself for their own personal gain. So screw these guys. I have no problem with saying that they're charlatans. So I'm going to end my freeform riff on Bitcoin right there. I will revisit some of these themes in later videos. Hope you enjoyed. Cheers.